What's up, you guys? In today's video, we're going to be talking about why the stock market is going to continue to fall and why there's going to be a tremendous amount of trouble ahead for the economy. So if you're interested in this kind of stuff, be sure to stick around. Let's get into it. So instead of looking at things through the lens of, are we going to have inflation? Are we going to have deflation? Let's just really simplify things even further and say, are we going to have more economic activity or are we going to have less economic activity? And as it sits right now, economic activity is on a downward decline. I was just chatting with one of my buddies who is a realtor here in the Vancouver area. We're just, shooting the shit a little bit. And, I was just asking him what he's kind of seeing in the market right now. And he was telling me that year over year, home sales are down over 30% now. So that's starting to tell us that buyers of, not only real estate, but other things are starting to become exhausted. And people just don't have the money to be spending on discretionary items like they used to. For example, when interest rates were a lot lower and, credit was a lot more easily accessible, people are starting to tighten their belt a little bit. And, with prices of consumer goods and services starting to go up very rapidly, people have to pay their bills one way or another. So they're going to sell the most easily liquid thing that they have. So what that means is, stuff like stocks, stuff like bonds, gold, silver, all of it, Bitcoin even. I love all of these things. But, unfortunately, with the current environment, the way, things are set up, it's not looking very optimistic for asset markets right now because, people's number one priority is keeping a roof over their head. So just keep that in mind. And, hopefully that you were prepared, before this. I know I've talked about this on my channel before. The fact that I did have a very large cash position readily available. And, I did that, started building that up kind of in the latter part of, last year and, into the beginning of this year as well. I was, starting to sell some of my positions in various assets that I was holding. And, therefore, I'm not really too worried about it. If the market goes down, another 15, 20, 30%, I'm going to be okay because, I was able to set up my portfolio in a way and I was able to keep on top of things that, when the, Federal Reserve and central banks and stuff like that started to realize that they are completely incompetent and made a mistake and started to tighten the belt on the liquidity spigot, that, things were not going to be looking so good. You can't print money forever. I think they know that. And, they're going to give people the illusion that they're in control. And in my opinion anyways, they're going to continue to tighten until they break something. And then when they break something is when they'll come out and say, yeah, we're going to have to, quote unquote, save the system, as they always say. And we're going to have to print more. And at that time is when I'm going to say, all right, we're going to go on a buying spree. We're going to go shopping. I'll keep you guys updated on that for sure. But I just wanted to add, in addition to that as well, just some things going on, some boots on the ground information of, things going on in the real economy anyways. Some of you might not be aware of, I'm a Red Seal steam fitter and currently just working out at the Vancouver shipyards right now. And, things are starting to get really slow out there as well. I mean, some of the stuff that it takes, like just really, really basic stuff, that you could get on a truck within a couple of hours, is now taking weeks to get. So things are really slowing down quite a bit. And, what that means, eventually people get laid off and lose their jobs. And, it's part of the game. These are just, another economic cycle playing out. I think the economic cycles have a lot to do with what central banks are doing with liquidity and quantitative easing and whatnot. So it's just going to be something that you're going to have to be prepared for. And, just be sure that, you have a plan and stick to that plan as well. Try to be disciplined and follow through with what you tell yourself that you're going to be doing in order to help yourself build wealth and live the best possible life that you can. So one more quick thing that I wanted to add here is that, in addition to, economic activity starting to slow down a little bit, at least in the housing market anyways, here in the Vancouver area, in addition to other things, people are just carrying so much debt right now. It's absolutely unbelievable. Like every time I look at data, and read articles about how strapped consumers are and just households in general for extra cash. Like seems like everybody I talk to, just friends of mine, even acquaintances and whatnot, whenever I go to group events and stuff like that, everybody is just like scraping by, living paycheck to paycheck. Oh, Rob, I got this payment, I got that, blah 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 blah, right? So you could imagine that when people are as levered to the gills as they are with debt, interest rates going up at the same time, the cost to service that debt is also going to get a lot more expensive. So if you are somebody who didn't take out debt at a fixed rate to maybe buy real estate or something like that, a couple years ago when shit really hit the fan, then it might not be looking so good for you right now. Maybe you're a speculator, somebody who decided that they wanted to, chase the bubble on the way up. And now we're kind of at a teetering point, at least in the real estate market anyways, from what I've heard from my buddy, that, things aren't looking so good on that front. So it's definitely another factor to consider when it comes to just analyzing markets and where we want to put money to help build our wealth, but at the same time we want to be staying away from things that are like high levered balance sheets. For example, you want to be looking for companies that have nice clean balance sheets that aren't going to be too affected by the hiking of the interest rates and whatnot, and making sure that you're getting them at a cheap price. If you're getting them at a cheap price in relation to their cash flow or their the amount of assets that they have on their balance sheet, who cares if the price goes up or down? If it pays you to own it, whoop-de-doo. At least that's my plan anyways. I'm just trying to keep it really simple for some of the stocks and positions that I have anyways. You want to own companies that produce real things that people are going to need even in hard, troubling times. So another thing to consider and keep in mind. So hopefully you guys got some value and some insight out of this video. I know it's a bit of a short one, but I like to keep it short and sweet and no BS. So if you guys are a fan of that kind of content when it comes to money, economics, understanding markets better, I like to attack these things with a lot of enthusiasm. So be sure to stick around and subscribe for more videos, and we'll see you on the next one.